The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Larry Pesavento.
Okay, good afternoon, folks. I started the show today with a chart of Baidu. I think I did. I think I put that in there. Oh, boy. Yeah, I did. Anyway, as you can see, Baidu's completed a very large ABCD pattern to the downsides, had a very good rally. The key here is you don't want this stock to go below 187. The buy would have been right about 188. And it's trading about $6 or $7, higher than that so far. So that's an ideal ABCD. The ABCDs don't always work, but when they do work, they work, very, very well. So you want to be watching it. Tomorrow we're going to try to have Rich Anderson on of Anderson Capital Management. We've got a really interesting situation in soybeans lining up. Soybeans are under a great deal of pressure. They're approaching the $9 bushel level that Rich talked about last week. So I will bring that chart on a little bit later in the show. But first, I had a couple requests to handle a few stocks that people asked me about. The second one that someone asked about was the stock of Tesla. And as you can see here, I'll put this in. And you'll notice that Tesla went up to the 786 retracement of the November high. And then it went up to the 61% retracement of the high that we made back in September when we had the island reversal up there in Tesla. And it's been down, it's down about 2% from the high. The key here is it cannot go above the 250 level after the two-day correction that we've had here. So we want to watch that. If you happen to be short this stock, just don't let it get above 250. Risk here is very, very small. The sale came in around 240 to around 247.5, so you certainly don't have to risk too much from this level. I'll do one. I have one other one that someone has asked me about, and that's the all-time greatest stock in the world. Anybody that can guess this will win a prize. Oh, we've already have a winner from Claridge, Nebraska. He'll win the color TV, and we'll have it shipped out to him early next week. And we're going to take up a little collection here for the shipping. This is Apple. Looking at the chart over the last 10 days or so, you can see we had that high up there after the earnings. The market broke down, and today went up and completed the ABCD Gartly pattern right up at the 61% retracement, up at that 131 and change level. And so this does complete that Gartly. If it's good, the stock's not going to get above 130, 132. So your risk on this stock is only about $1 a share from the high of the day. So if it gets above there, you don't know where it's going to go, but that's what it looks like from my point of view. Okay, now I've been doing a little bit of, I've known Norm Winsky was our guest on Monday, and I've known Norm for many years, I think 35. And we had a lot of conversations about the stock market and stuff, and especially about Fibonacci and the Mercury retrograde and the new moon phenomenon that we've seen happen just recently. And so Norm did some research, and he's got a new letter that just came out last night, a special report called The Fork in the Road, that the stock market is at the proverbial moment of truth. Well, I feel very strongly about that, and we're going to take a look at why. This is the Dow Jones going back to 1987. What's really amazing, folks, when you look at the left side of this chart, and see that little tiny burp down there, that is the 1987 crash low. I mean, that really does not do that justice at all, because I was there, and I was on the right side of the market, and I was still scared to death. So when you see this chart and you see that 1987 cash low, boy, pay it some respect, because it deserved respect. That could have been the end of the whole thing, but fortunately, the bobbleheads prevailed, and the market went up. And we made a perfect 61% retracement into the too big to fail scenario that we had after the debacle in the real estate business back on March the 9th. of 2009. That was a perfect 61% retracement. And now you can see the ABCD pattern completing that broadening pattern that we have in the Dow Jones that measures somewhere up in the 18,300 to 500 level. But we're going to do a little bit something different today, is I'd like for you to really follow along with this next one, because this is the most amazing one that I think we could pick out to look at. And this is the cash S&P. And see that someone said that they thought 2008 was worse, in my opinion. Not even close, cowboys and cowgirls. Not even close. You had to be there. I was scared. I mean, and I was short. And I was scared. I didn't think we'd be able to get our money out of the clearing firms. That's how bad it was. I mean, the handles on the S&P right now, it's trading, 223, 222. It was trading 252, 212. I mean, there's a 40-point spread, and that was between the bid and the ask, and you couldn't get anybody to take the other side of the trade. So it was no liquidity. It just total panic. It lasted for about 20 hours. And about midday on October the 20th, it started to settle down, and the market began its rally from 1600 in the Dow all the way up to 18,300. If you will take and write down the high in the S&P cash on October the 11th, 2007, it was 157.52. On that day, we had Mercury going retrograde, and we had a new moon. October 11th, 2007. The market since went down into March the 9th of 2009, when it hit 67.10. If you subtract 157.52 from 67.10, you come up with 90.42. If you multiply that figure times 1.618 to get it comes out to 146.29. Added to 67.10, and it comes into 213.39. Yesterday's cash high was 213.38. I don't know if this means anything or not, but guess what we had yesterday? We had on Monday, we had Mercury retrograde, and we also had the new moon. Now, this might not mean anything this time, but it certainly would deserve our attention. Now, what Norm did is he went back. He has a pretty good astrological program and is pretty computer adept, which sort of leaves me in the dust. But he went back and he looked at other years. And there's been 10 instances in the last, since 1994, where we had a Mercury going retrograde at the exact time of the new moon or full moon. And these were flat, spot on, folks. I mean, you got to pay attention to this one. This might not work this time, but boy, it's worked a lot of times in a row. You can't even find a failure. It might, wait a day or two before it works, but boy, they have really been significant turns, and you have to pay attention to it. It might not work this time, which we've seen this times because of what's happening with the Federal Reserve and stuff, but we'll see what's going on from that point of view. I don't want to get into arguments about, the 2008 being worse than 1987, because that's non-negotiable in my book, folks. Trust me on that one. That one's non-negotiable. That was real panic city. 2009 was normal. Heck, the market was trading. Sure, it was going up 600, down 700 points, but not 1,600 points in one day. Multiply 16% times where we are now. When the Dow's down 2,500 points in one day, then you can talk to me. But not until you see that day where you're down 16% in one day, which happened to be the greatest buying opportunity since 1982, but neither here nor there. Didn't mean anything. So anyway, we've got this number that's come up. It's right at the 61% or 1.618 expansion. We have all the other. The NASDAQ has not made new high by any stretch of the imagination, but we'll see if that's going. This could possibly fail real easily. I mean, this thing has had 10 winners in a row, and this could be the time that it doesn't work. But things are lined up. Whether they continue to line up that way or not, one has to remain to be seen. But it's just going to be a situation that it's going to be quite interesting to see what happens over these next few days and weeks of this happening. So that'll be very, very interesting phenomenon that's going. But we really need the S&P to close below the 211 level. We get below 211 in the S&P, and then you would be looking at something that would be, rather ominous, I would think. It's not far away, but it's going to take a while, to get to that spot if it can do that. So we'll have to allow to see if that's going to be the case or not. The U.S. dollar has still continued to rally strongly, much like that dollar index that we looked at on Monday. It went right down to the exact 61% retracement, and we turned, really, really strongly. And we're still under pressure in the euros, and the pound are still moving around quite a bit. So it's a very, very touch and go situation on some of these things. So we want to use some common sense here and wait to see if the market is really going to turn. Anybody that does not believe that importance of the Dow Jones transportation means anything is not playing with all the cards in the deck, folks. Something is really wrong here with this index if it can only do this. I'm going to put this in here and show it to you what it looks like, because not many people believe in the Dow theory anymore. But you stop and think that the transportation stocks, which are the ones that ship the goods and ship the people, these things something's wrong here. That not all the cards are not being put on the table. I know the airlines are full. I fly, just flew recently. I came back to Philadelphia, and the flight was full. And even though when I came through Chicago, the airport was packed. But I don't know what's causing this, but somebody's in there selling transportation stocks when they're buying, the Dow stocks. So that's not a good sign when you see this thing in a very strong downtrend. We're making new lows for the year again today, with it down 100 and some points, which is quite a bit. In fact, you have to be respectful for the Dow to being down just a fraction, considering that the transportation is down that much. Because if the transportation would start to rally, the Dow would probably take off and rally even more. So that means something. It's a really interesting phenomenon of something like this occurring with the utilities and the Dow Jones. That's called the classical Dow theory. It was promoted by Richard Ray, and then also Robert Ray, and then also by Richard Russell. So this is, I think, quite important. But we got a really strong a lot of strong cycle stuff Monday and Tuesday and Wednesday. It should be over by now. If we make a new high now, we'll have to wait and see. The New York Stock Exchange Index has actually been in a very, very tight range for the last 4 days, and we'll be right back. We got gold up a couple of dollars, the Dow down about 8, and the dollar still rallying a little bit.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartlys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and we're going to be looking at the price of the E-mini S&P. This is on a 4-hour chart, I believe, and it goes back and shows, where we are with the ABCDs. The actual price measurement was to 2133. We hit 2134 on early Sunday night, as I recall, and then the market, made its top or Monday morning later, but not the same top that we had on Sunday. That was equivalent to the level of the cash S&P. Like I said before, I don't know if this is going to work or not, but there's certainly a lot of similarities between these other time frames that are there. If you went back and looked at the bottom in October of 1974, that was the crash bottom that gave me a big lesson. And then the market doubled bottom in December of 1974. And we had Mercury going retrograde at both of those times, 3 months apart, because that's how it works. And that was the bottom, 540, I believe, in the Dow Jones. And from there, away she went to the upside. So these astro cycles, they work. Unfortunately, I don't have the Holy Grail, but nobody else does either. What you try to do is to put the odds and probabilities in your favor, and that's what we really have, I think, going for us now with this 1.618 number. But if we go above the highs that we made just this past Monday, above 2134, in the S&P, then I would say this is not working, and it's probably going to go even a lot higher, especially the fact that the time came in pretty much where it should have come in. Now we have an interesting thing happen because the New York Stock Exchange Index did not make a new high from April 27th. If you would have told me that the Dow was up over 100 points, about 150 points more than that old high, and the S&P took it out by a little bit, not very much, but just a little bit, and you'd have told me that New York Stock Exchange Index had not taken that high out, I would have really questioned you about it. I'm going to have a little story about that later in the month if that high is not taken out, because it's very interesting from my perspective, because I think it's very important. I'm not shocked very often, folks, about things that happened in the market. 1987 shocked me, with the Dow, opening down, 400 points. Well, actually opened down about 250 and moved down to be down 500 and some that day, but and that was 16.5% in one day. But one of the things that really shocked me was it was in 1976. I had a big position in soybeans, and the report had come out on Friday, and I was in the office on Monday. The report was so bullish that the comments were that the only soybeans that would probably be available would be viewed at the Smithsonian Institute. And when I started hearing that kind of stuff, I'd been around just long enough to know that, something's not right. They were calling beans to be up the limit 3 to 5 days in a row. It was that bullish. And so I got to the office that day early, and my broker, Bob Shattuck, I told him, and I had a lot of positions on. Everybody that had listened to me, I was in positions in either oil, meal, and beans, or all of them. It was my father, the mayor of Terre Haute, Indiana, Ralph Tucker, all of the doctors, the pediatrician, everybody in the family that would listen to me had bought these beans, and we had them for 9 months, and they had made a huge amount of money, and I didn't want to give any of it back. So I told Bob to help me write tickets, because I had over 100 different accounts that I had opened over a period of, and I wasn't a broker. I was just, acting as telling people to buy them, and that was what I did. And I said, let's just, protect ourselves here, and we'll put our order to sell everything at 1 penny under the high of the day, Friday. And so if they open lower, then we were out. And the reports came out, the squawk box was on, and everybody was saying, wow, beans are going to be up 3 to 5 limits. Won't be any trading the next few days. Well, let's go over to the meat pits and see if we could buy something there. And then with about an hour coming in, the guy said, well, there's some far out selling into 1977 beans, but there's nothing going on in the 76 contracts. And then about 20 minutes before, he says, well, maybe a few of the back end contracts we're going to trade, and I will finish the story after we get done with the break here. I guess we got to pay a few bills. We got the Dow Jones down just a little bit. Well, maybe the break is not here. Well, I'll finish the story anyway, because I do have a little bit more to do. We'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
I come back and I wanted to finish the story about the 1976 bean move. The report came out. It was very bullish. The Squawk Box was saying there would be very little trading. And as we got closer to the time frame, I had written all the orders to sell if they were to be down 1 penny on the day. They had to be basically limit up or I was out. And they were saying that there was no trading far out. And then about 45 minutes, there was a little bit of selling showing up in far out 1977 beans. About 15 minutes before, there were some selling in 76 far out options. Remember, this was this was March of 76. And so a little bit, about 5 minutes to go, the guy says, well, it looks like we're not going to be quite limit up. He said, looks like maybe limit was 30 cents. He said, maybe 25 to 30 cents higher in beans. About 3 minutes to go, he comes on and he said about 15 cents higher it looks like right now. And about 1 minute to go, he started using expletives that I can't use on the there was JC and MF. Oh my God, oh my God, oh my God. And they opened 2 cents lower. And in 5 minutes, every option to beans was limit down, locked. Bang, 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 bang. Beans, oil, meal, all locked, limit down for 3 solid days. And that was with the most bullish report that they'd ever seen in the bean market. It was over. And that was it. When the fat lady came to sing, she brought her orchestra, and that was it. And I was able to get out. I had some bad fills along the way, but boy, was I happy. I left the office that day. I made sure all accounts had cleared. I didn't trade for about 5 or 6 weeks, and the next trade I did, I went to work for Drexel Burnham Lambert because they had hired me, given the fact that I had all these people following me, and none of them followed me to Drexel. I handled Drexel's accounts by myself, along with Jim Twentyman and a few other guys. But it was one of my most memorable experiences of the whole my whole trading career. There were a few others, of course, but that was one of my most memorable. I knew something was wrong when a report was that bullish. And you got to be really careful. Remember, the news follows the trend, and by the time you hear about it, it's already over. That's, the bottom line of, what we're looking at. I mean, folks, if you're long stocks, I mean, look at that transportation index and tell me that doesn't scare you just a little bit. I mean, that's not good. Go back and show me bull markets that have continued on with a transportation index like this. And the utilities is not much better, and that's mainly because the bond market doesn't have many friends at all, and it doesn't look like it wants to have many friends. It looks like we're going to break 150 in the bonds here, very, very shortly. There cannot be a flight to quality anymore because they don't view the Treasury bonds as quality anymore because junk bonds are better quality. The junk bond market is actually, look, you won't believe this chart. I mean, I've posted this several times, and it's pretty close to being up to date. I think it's out of date by maybe one day at the most. But you can see, junk bonds have been rallying since March, and Treasury bonds, AAA Treasury bonds, have been absolutely collapsing to the tune of 11 points or $11,000. Something's not right with this picture either. Maybe the old cowboy from Tucson does not know what's going to happen or what the Fed's going to pull out of their hat next, or maybe what China pulls out of their hat. Maybe they say that we don't want to hold these Treasury bonds anymore, and that's where the problem lies. But they're not going to tell us about that until after the orchestra is playing. Remember that. The charts follow the trend, so we want to watch that. Now, I want to bring up the chart of the soybeans because we're going to have Rich on next week. I want to bring this up to make sure I talk about a little bit because we have a beautiful pattern forming here. It's a butterfly pattern down around $9 in the soybeans. If you remember, we had Rich on last week and he talked about the importance of $9 soybeans. They're already down 36 cents from where he talked about them last Thursday, and it looks like we've got another 10 or 15 cents to go to the downside, so they should be coming in tomorrow. And we're going to have to take a look at maybe an option program where we go into the farmer business, where we start our own farm with 5,000 bushels of soybeans, which is about 50 acres, I guess, something like that. I don't remember exactly. It's been that long ago. Back when I was a kid, they used soybeans and they just turned them over because of the nitrogen content to make the corn better. But now soybeans are the bigger crop. But this is a really nice pattern coming in, and it's coming in perfectly right into the Memorial Day weekend. And Memorial Day 1988 was a monster year. That's the start of a big drought year. Beans rallied from $5 to $10, $50,000 in a matter of 9 weeks. And that was really a big year. 83 was another big year with the same type of thing where El Nino came in and we had that high pressure center come over the Midwest. But Rich knows more about that, and he'll talk to us about that a little bit. Now, we want to mention just a little bit about the gold and silver because they have held out pretty good. We're going to look at the DBA, which is the ETF for commodities. We're going to take a look at that tomorrow, and we'll see if that's going to hold. And we'll talk to Rich about the corn, beans, and wheat because we'll look at the whole complex. Wheat's not affected because it's finished its growing stuff. So the beans and corn are what we're really looking at. So that's the key to watching it. Now, gold and silver have had a really good sell-off here. We backed off about $30 from our high in the gold. We went up and took out the previous. Let's do silver first because I think that's the easier one to see because of the fact that I've got that chart all ready to go. And there we go. We went up and made that ABCD pattern up around 1780. We got to 1777.5 which was pretty close, and we backed off quite a bit. There should be really strong support at around 1660 per ounce in silver. That would be very, very important to watch that. The same thing in the gold market. We have a really nice situation here in gold, and I'll pull this up here, and we'll be able to bring the chart up, and we'll be ready to go. Gold got up to 1232, and then we backed off down to around the 1200 level. There should be really strong support around the 1195, 1190 level in gold, because we've had some open interest increases here over the last 4 or 5 trading days in gold and silver, and that tells us that we have some new buying coming into the market, which is a really good thing to have going on at this time. So that's the key to watching some of these things, as near as I can tell. We had a question about Priceline. I posted the chart of Priceline. As you can see, it's been following that long-term downtrend line that we talked about with Charlie from La Paz, Mexico, a couple weeks ago. It stops right at that level and has backed off, better than $60. And of course, that stock is, sells around 1,200, so 1200. So at $60 is not much, but it's still $60 a share. So Priceline still looks like it's, heading to the downside. We'll have to, let time tell if it's going to work or not, but that's what it's doing, presently. Okay. Now, someone has a question about weather. I'll have to hold that till tomorrow. And believe me, the weatherman, he can't predict much farther than 5 days out. The weather patterns change that much, and they got some of the greatest scientific tools that you can find, but even to go 5 days out is really, really difficult. So, because the weather can change in a heartbeat, as you know, and this is really tough. So you've got to let the prices, tell you what the people are trying to anticipate. Remember, these bull markets, if they come, they're anticipatory bull markets. They're anticipating something is going to happen, as opposed to a realizing bull market where there's just absolutely fabulous demand like you have with Apple, and everybody wants to own the stock and own the products. That's a realizing bull market. And yet you still use the technical patterns to try to tell where you are as you go through these different ups and downs in the market. Okay, we had another question about the euro. The euro went up to that 114.56 level last Friday. That's where we had the 3 drive to a top pattern. We also had that pattern in the British pound. Now, that's, to me, was the most amazing pattern of all. If you don't believe in pattern recognition or anything, you really ought to take a look at this British pound chart, because this pretty much tells you, this is the one I posted last Friday. Since that time, we've dropped to well over 300 pips, and we went from 158.10 down to 154 and change. So we dropped about 400 points, and we had absolutely 5 ratios there: 50% retracement from July of 2014, a 61% retracement from September 2014, 78% retracement from October 2014, a 1.27 expansion of February 2015, and a 1.618 expansion of the move from April the 27th into that high. When you have that many ratios coming together, folks, that is the time where everything is coming together. It'll either work or it doesn't. Well, that's usually a good case. But that's the same situation that we have in stocks right now. The stock market has Mercury retrograde, and we have a new moon, and it either's going to go down or it's going to pop through there and, put egg on my face again. Fortunately, I'm a master at making omelets, so that's not a problem. So I also make a really good frittata. But, if the market closes badly, below 211 in the S&P futures, then I would say, yes, this thing is probably starting its move to the downside. And whether it's going to continue or not, only the gods know, and she doesn't tell us. So we'll just wait one day at a time to see what's going on. But folks, when you see that transportation index down that far, that's not a good sign. that is not a good sign, because the transportation moves the products that people are buying. And if they're not getting the orders, that means out in the future they are scaling back. Something is not right. Where it's at, I don't know, but the news follows a trend. This is a big index, the transportation index. I believe there's 20 stocks in that of the largest, including the airlines, the shippers, and transport, UPS and Federal Express, and all that stuff. Railroads, buses, airplanes, all of that stuff is really going. And we had the same thing with the IBB. We've had a really interesting situation there where the IBB doesn't rally very much. Also, let's do let's quickly look at the IBB on a fresh chart here, because the one I posted Friday, I haven't seen what it's done today, and let's just see if that Gartly held. Actually, it didn't. It broke through. See, there's a positive sign to the market, and that is the fact that well, it's up to the same ratio it was before, but it didn't stop where I thought it was going to stop. All right, let's put that up here. See, I thought it was going to stop on Friday at the 257 level, and we've actually, let me just refresh this 1 week and see if I've got the, yeah, it's okay. But we've went up to made a 0.84 retracement. That's reciprocal of root 2. And you also see the last rally that it made went up to the 0.84 ratio, and whether that's the case today, but it's still quite strong. You can't really argue with it. But this one does look bullish, but compared to the transportation, and that Dow Jones, that IBB is reflected of biotech stocks, and boy, they come out with buyouts, and if you're on the wrong side of one of those puppies, boy, they punish you pretty badly. So that's another thing that you want to really be watching very, very closely. I want to do a couple of currency things here before the market gets too much out of the way here. We got to pay a few bills here coming up, but we've got a really interesting pattern forming right now in the Japanese yen. And it's going to be a pretty nice pattern, I think, if it unfolds here. I'll put this red at the break time when we come up. I will bring I'll bring this up for the Japanese yen and show you where it is, because it'll really affect what's happening with the Nikkei Dow, because this thing follows the Nikkei, quite a bit, and that's been in a breakout mode quite a bit. So we will cover that when we get ready for this next break. Well, I should do this together. Yeah, let's just do this together. Yeah, that'll be fun to do something a little different. First of all, I'm going to post a chart in and let you see this chart on the dollar yen. And then what I'm going to do is I'm going to take the time cycle and put it from high to high, going back to early in January. Let's move this over and move this down a little bit. There we go. Uh-oh. Not going to be able to fit it on the page. Well, can't do that. We'll just talk about it then. Anyway, what we have happening now is we've got an ABCD. I can put that in there. We've got an ABCD forming right up here where we're trading right now. So the risk here is virtually a very, very small amount. When you're trading something that's $100,000, you don't have to risk very much at this level right now. 20 pips or about $200 is all you would have to risk. The actual number was at 21.38, and we got to 21.28 right now. So I'm going to take a break here. We'll be right back to finish up the show after these few words.
If you're like me, you see the world's emerging nations as a very real opportunity, as these countries and their economies are developing right before our eyes. And you can rest assured that Everbank has spotted this opportunity too. In fact, they have just released the second running of their 5-year Market Safe Futures Economy CD. This is a CD that could really deliver, but you only have until June 11th to take advantage. Consider the facts. If the future economy's currencies beat the US dollar over the CD term, you'll get all of the upside at maturity. And should they lose, no worries. There's zero downside risk here, as you get back 100% of your deposited principal. Don't miss out. The June 11th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is an equal housing lender and member FDIC.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Okay, folks, we're taking a look at the New York Stock Exchange Index. We're going to look at it up close and personal right now, and you can see that we have not taken out the highs of April 27th as yet. That, to me, is very, very amazing. The fact that you've got the Dow Jones 150 points higher than that level. You got the NASDAQ didn't take it out either, but the S&P did go higher by 1.27. So this is truly an amazing thing, because this is a big index and it encompasses quite a bit. So the distance in time between that December low that we had last year and the high to where we are now is also symmetrical in time. But the time parameter that we're looking at is that Mercury retrograde and new moon, which the new moon was on Monday, and the Mercury retrograde was on Sunday. So we're certainly in the ballpark for that if it's going to work. But, you know, it might be different this time. Market could turn and just keep going up, you know, quite a bit without any trouble at all. So doesn't take much. But the fact that this index has not gone higher, folks, it's only 3% higher than where it was last July. And that was after we had a big 10% correction into October of last year. So that's an amazing statistic, in my opinion. But whether that means anything or not, certainly doesn't mean anything right now. We'll have to keep an eye on that. Treasury bonds continue to go down. I want to talk more about those on Friday. They don't look like they have any friends at all until we get down around that 149 level, but we'll let that decide whether that's going to be the case or not. We have a major top come in here on the euro. We mentioned that several times going into last week's show, and we already talked about the British pound. I wanted to bring the euro up and get this thing moving. I hope I haven't lost connection. I'm going to continue talking even if I have lost connection, but we'll see. As you can see, the euro went right up to that 114.60 level and has sold all the way back down to the we've come all the way. Wow, we've really come down quite a bit. As you can see, we broke all the way down into the 112 areas. So this is a big move. Actually, we're down to the wow, we've come down that far? Holy cow, we've dropped quite a bit. So we'll see if that's going to be in here, if it's going to take a look. Oh, we got a request here for something. Let's just take care of the request. That's on natural gas. And if anybody is comparable about speaking about natural gas, it would certainly be yours truly. I love trading this stuff. One of the biggest moves I ever had was last February in natural gas, when it had a 1,000-point drop in one day. That was really, there we go. 1 second here. Oh dear. The problem is that they have, oh, I know what it's got. It's not, natural gas is N, not with a G. There we go. There we go. Yeah, we just have a little bit of a shooting star pattern forming. The thing is, we took the high out of yesterday, and by one pip, and now we have this very infamous looking shooting star candle in natural gas. As you can see it, it's the opposite of a hammer. The market makes a high and then closes right near its low. And the two ominous things is the fact that it's completed the ABCD pattern up near the 1-to-1 ratio, but we took out yesterday's high by one tick, and at 302 and change, and 302.10. Yesterday's was 302 even. Boy, that's really a negative thing. And then to drop 10 cents, which is a great deal in natural gas, is a really very ominous situation, in my opinion. So that's it, folks. Live every day in an attitude of gratitude, and may God bless.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.